ska bli intressant. Gick. Shit. Nice. Well, ain't that something? All right, let's do this. Ta på dig hörlurarna sen. Lyssna från kanalen. Jag ska sätta på musik. Ska vi se om det blir en nice volume on that.
Yep.
Vi har utmärkt anslutning till den där. Yes, George. Thank you. Okej, då. Nice, huh? All right, my people. So let's do this. GBP the British market just opened, and we're just gonna take a zoom-in look on what GBP USD is doing, because there's always some action in the morning, exactly when the markets open up. From the long range, from the wide perspective, let's take a quick look at it. This is what we got. So I've made this box. Wait, I'm gonna remove some drawings here so we see it easier to remove the volume as well. So you see this box here. This is where the price is ranging right now for GBP USD, and we want to see a breakout from that box of the price. So let's take a look at what the zone that we're ranging in really is. Let's remove these drawings, not necessary anymore. And the zone, of course, is the supply zone. What is the supply zone? The supply zone, as I always say, it's between the 78.6 and the 88.6 Fibonacci retracement. So these two red lines that you see here is the supply zone. I'm gonna give a quick look. So this is my Fibonacci settings. If you want to use the same settings, or if you want to take some inspiration out of them, then take a picture of the screen and put them into your trading view as well, so you can use the same settings. Now, as I mentioned, these two red ones, these two red lines, the 78.6 and the 88.6 retracement, that's the supply zone when we're looking for reversal. So when the market has come up and might reverse down, and it's the opposite when the market is going down and might bounce up. So when the market is going down, let's remove this one for clarity. When the market is going down like this, oh sorry man, I mean like this. And you see the market going down, and this here is the demand zone. All right, so What that means is just simply that there's a lot of demand here. There's a lot of orders. There's a lot of unfilled orders here. Buy limits. Right now, what we want to see is, yeah, we want to get back to this. So from this last swing, this is the last swing that we had. We have an impulse here, but it has not shown its true face yet. We don't see the real structure in it yet. So this is the only way, the last real swing that we had. And I'm pulling the Fibonacci from the top of that swing to the bottom, going into the 4-hourly time frame. See what we got. See what it tells us. So like I always say, the market tells you a story. So trying to read and understand the story. See what it's telling you. All right. So simply from this, what I see directly is, yeah, of course, as mentioned. So we are in this supply zone. There's a lot of supply there. And market is trying to break out. But it's like it can't find its way out. So we're inside this box here. We've been ranging inside this box. And this box is very confluent with the volume that we see in the market. So if I pull up the volume profile, this is the volume profile. And I take it, let the volume profile be from this last swing here. Yeah, you see the most of the volume. So this, let me pull a box for the where the volume is, where the most of the volume is. So we got that. Let's do like this. Let's do like this. So I'm trying to take it from equal tops on the edges of the volume. Is where we got most of the volume, and you guys see it conflues perfectly with where we got the resistance and the support of this consolidation area. Now we want to see breakout. So hopefully today we'll see a breakout to the bottom down. Why I'm guessing to the bottom down? Because I'm bearish bias when it comes to GBP USD. Not so much on because of fundamentals, but because of this. We had a nice impulse up, and we need to get down to pick up some liquidity before we actually continue up. But right now there's no entry for a buy, there's no entry for a sell from what I see. So we just leave it like this and we move on to the next currency pair. The only thing we quickly can say here is, before we move on, is that we got, yeah, so this here is a very strong support that was acting as resistance previously. And let me just recolor this. Yeah, so this zone has been support several times, as you guys see, and it has also been resistance. And currently what's happening is we might break through. But even if we break through, I don't see the sell until we break this level here. Until we break this level, this whole level, I don't see no sell. You can take a quick scalp, maybe from here to here. Yeah, not even that. That's a very risky trade if you do that. So what we need to see basically is a breakdown, a clearing of these lows here, and then we can take a trade. And the first TP will be around these lows, because that's the first thing that the market will try to clear. and we got these ones, and then we will come down to the sweet spot zone here. All right. With that said, let's look at Euro USD. So Euro USD has been funny with us because we saw a trade like, what was it, last week, Monday, and it's this trade that you see here. But the problem with that trade is the entry zone is here, and that's me being nice. I wanted to have the entry zone here actually. So we had entry zone here. What did the market do? Well, you see it. It came up, but it didn't come up all the way. So it didn't touch our sell limit. It didn't trigger our sell limit. So it came up once, almost triggered it, and now it came up again and almost triggered it again. And yesterday we saw the markets going up. We were like, okay, finally, we're going into the sell. Nah, we're going back down again. So right now, me and Euro USD, we ain't okay. I gotta let this market play out a little bit and see what's happening. When it comes to gold, well, before I talk about gold, let's look into Monero. Let's see what Monero got for us. So let's go to the monitor and see if we got any trades. Yeah, and I was expecting actually Monero to throw some gold to us. Yep. So you see this cipher harmonic pattern shaping being created here, and it need to come down to this level to about 1906 1907 US dollars to be completed. Right now it's incompleted, as you see. So that's a cipher harmonic pattern on the 4-hourly time frame. If it comes down here, we got a very nice buy. I will double check that in TradingView to see if it conflues with my confirmations, but I know already now that I'm very positive to it because I've been keeping an eye on gold for basically all the time. Let's look at this other one. This is another cipher on the 1-hourly time frame. Oh, you see, entry at about 107, 108. Gartley pattern. There's a lot of patterns here, but all of them be incomplete when it comes to gold. Yeah, I don't see one single one that is completed. Gartley. Yeah, so we get 3 Gartley patterns. Funny. This one got a lower entry. Okay, so we're going to take a look at the buy opportunity for gold later. First, we want to finish. We want to go through the whole. What's this? We want to go through what Monero tells us. See if Monero got something more in store for us. All right, let's look for some completed patterns. USD CAD. USD CAD is moving upwards. That's not a trade we want to jump into now, but I know one thing. We need to check the Forex news. This is the Forex news. Today, January 3rd. No, that's not today. January 31. Yep. So, as you guys see, most of these folders here, this is news for today that's regarding Forex, the Forex market. This homepage is called Forex Factory. If you don't have it, I recommend you to find it, to bookmark it. It's a very good page to keep track on the news and what's going on in the markets and what will affect the markets. So as you guys see, later today at 2:30 p.m. we have our red folders. We have red folders, and it's one red folder for Canada, and we got a red one for US and an orange one for US, and that means this is high impacting news that impact the market highly. Let's see this one. Changing the inflation adjusted value of all goods and services produced by the economy. Actual greater than forecast is good for currency. So So we have forecasted 0.1. If it comes higher, if let's say it becomes 0.2, then that is good for CAD. So that means that all currency pairs that is connected with CAD will go up. And the opposite thing, all currency pairs that is connected to CAD, that is paired with CAD, will go down. All CAD pairs connected to other currencies will go up. So let's look at Forex. I see gold is going down. We're going to take a look at it very soon. CAD. So let's look at, for example, CAD JPY. I want to take a look at CAD USD. CAD USD. CAD USD. Let's see. I wonder. Let's take that one. Oh snap! What did I do? CAD USD. Oh. Yeah. Not so smooth. There it is. All right. Cool. So, in other words, if greater than forecast, we will see the markets go up. We will see this pair go up. And if worse than forecast, it will go down. Basically, as simple as that. Let's jump into gold because I saw some action with gold and I want to see what's going on there. We might see a trade because we're coming very close into a trading, an entry zone. 1 hour, hourly time frame. I want to pull the Fibonacci from the last impulse. That's from here to this top. From this bottom to this top. This is an impulse, as you see. Whoop. Why I see this as an impulse? High, higher low, higher high, higher low, and so on, all the way up here. And what we then quickly see is what I was looking for. We came down and touched the supply zone, and we're probably gonna shoot back up from there. This is exactly what I wanted to see. It conflues perfectly with Monero. Let's get back to this one. Boom. So we got this one basically completed now, and we got this one also completed now. It should be completed now. We got this one also completed now. So we got a lot of trades on Monero confluent about a buy. This one not completed yet, has a lower buy zone. I'm gonna see just if I can get a better picture of the entry for this. It's already starting to retrace up. I'm gonna see if I can get a better entry. The funny thing is, we've been doing this all week, and every time we're trying to find a better entry, the market just runs away from us. So we're just missing the trade. That's been happening to us all week. And by the way, if you wonder who's sitting behind me, it's my brother Daniel, assisting me in this live trading session.
It's going away again.
Yeah, I see that. That's nothing new. So let's do this. Let's pull Fibonacci from here to this bottom. Yeah, you see perfect confluence here on the 27.2 Fibonacci extension for so probably what we're going to see is the market come up and test this level here. The orange line is, let's see if we can get back to entry again before that. So we go down, we zoom in. We want to find an entry on gold. This is what we're looking for right now. Oh shit. Gold is hot. On a 1 minute time frame, we see a little top forming, a little lower low forming, and hopefully we see this market come back down because I love good entries, and I think that 1907.40 would be a good entry. So write it down. 1907. Entry for this trade is 1907.40. Question is, how long do we want to ride this trade? I need to see where it's going. And remember, everything I'm saying here is not financial advice. This is just my trades that I'm doing, and if you like to participate in the same trades, you're more than welcome. We got this, and we got this. So I would say this here, we need to okay, interesting. Okay, so most of the volume, as you see, is here. I'm looking for the volume. I want to see where the volume is. The market has pulled down to the volume here now. Most of the volume is up here. If we go up, we're gonna get stuck in this area. It's not gonna be a clean breakthrough or something, even if we want to go higher. So this is the target that we're shooting at, and in that target, we're looking for the perfect exit level. And I would say that's the red line. The red line here symbolizes where the most volume is concentrated inside this section. And the volume profile always shows you the volume of whatever is visible here. So if I pull the screen like this, now you see more volume is showing. We got this shadowed area. So this is 70% of all the volume from this whole, from all this trading that's been going on here. Now let's get back to the 1 minute time frame. Yeah, we get so the entries now. From what I'm seeing, the entries now. This market wants to reverse up. It wants to come down. We're leaving it for a little bit more, for a couple of minutes more, just to get that confirmed. You can enter now with a small lot. That's what I would do. That's what I'm going to do actually. And wait for my. If you're going into this trade, wait for me calling out the stop loss. It's coming in a minute. There you got gold. Going in with a small lot. Oh, this is good. All right. So we came to the entry zone. Perfect. Now let's just see this thing play out. Now is definitely the time to enter with a small lot. I'm gonna take a look for the stop loss, where we're putting the stop loss on this one. So if it comes down here, it will clear these lows. So that means, where do I put the stop loss then? I put the stop loss. I would want to put it here, to be honest. That would be the ultimate stop loss. But we cannot have that big of a stop loss. So we putting it at 1904.80. 1904.80 is the stop loss. I'll call it out in the Telegram channel, so give me 1 second so that people can participate in this trade if they're not on this live stream, because some people be working and stuff, so they cannot be on this live stream. And I'm calling out the take profits soon, so bear with me. Just gotta do this first. Now look at this. Take profit 1. Oh, stop. I'm not going to put it there. It's too high. Take profit 1 is at 1:19:11. Take profit 2 is at 19:15. Take profit 3, 1922.2, 1922.2. And last take profit, I would put it at 1928 or leave it open. So the market can run if it wants to run. Yeah, this market wants to reverse. We just gotta hope for the dollar not to do anything spectacular with us. It tends to do that sometimes. Especially days like this when you got news coming up. So, let's talk about this news. What you're gonna do with this news? How you gonna react to it? First and foremost, if you're a beginner, if you're not an experienced trader, don't trade the news. I'm saying that straight up. So, when these news hit, you don't want to be in the market in the same time. I will try to announce that on the Telegram channel, so you guys are ready when the news are live and when it's time for action in the market regarding to the news. But New York open, you got to be careful when New York opens up. When the New York market opens up, be careful with it. We got a red and orange folder, so be careful that when trading anything regarding USD. But as soon as USD is affected, it's basically it affects not most of the currencies, but a lot of the currencies. USD has power. It's a world currency, so maybe not for long, but right now it is. So don't trade the news. I will try to give some information in the Telegram channel regarding it, and then what you do is when you see the market react to the news, let's say it's pumping down, and you see good volume in the market when it's pumping down, it's moving with a clear direction, you can scalp it for a couple of pips. You scalp it for a couple of pips if you're an experienced trader. If you're not, just stay out of it until the market has done its thing. Let's just backtrack a little bit. Until the market has, so basically I think I remember 14th of December, yeah, not much happened here, but here we had this spike on the daily, on the 4 hourly time frame. So when this happens, you just have to let the market do its thing. Right after what happened, whoop. So people maybe went in here for a buy because they thought that we were going up to the sweet spot zone here, that we caught a lot of bullish momentum thanks to the news, and then consolidated and just reversed and swapped and just eliminated all the buyers from the market. We got a lot of sell action going on now, so it's risky to take a buy trade as we did. That's why I'm saying take a small lot, but it's a very nice trade and it's a very good spot for reversal. So we stick with that. I'm take a look at Bitcoin quickly before. Oh no, before I finish this stream. But first, I just want to see how the EMA is looking like here. Oh no, it's going down. We don't like that. Stay up. Yeah, so we got no support from the EMA right there. We'll see what happens. Maybe it just breaks through everything. If it does, it's coming down to these lows. If it breaks these lows, then I'll see the market coming down here to this big sweet spot zone. We see. But now we look at Bitcoin. My man, Mr. Bitcoin. Basically what Bitcoin did is had this pump, and in this pump, pulling Fibonacci from the bottom of that pump to the top here of this swing. The top was here. You always call in the top from the highest candle, from the highest closing candle, and its wick. So what we didn't see is market was using the 27.8 Fibonacci extension as first as resistance and then as support, but now it broke through and it's acting as resistance again. So it's playing around hard in this area, and we basically need to see the market make it a determination to what direction it should go from here, from this little zone. But from what I see, this structure looks actually bullish. What doesn't look bullish is that we are underneath the 27.2 Fibonacci extension, and it's acting as resistance. If we break through, come down and retest it, I can see this definitely as a bullish indicator. But what's talking against it is that we had this whole, this is the daily time frame, we had this whole run up. So we need to take the market needs to take a deep breath and retrace, pick up some liquidity. A lot of liquidity stuck here. A lot of, like this whole zone that you see here, this whole area, a lot of liquidity. First we got a lot of liquidity here, then a lot of liquidity here. So that liquidity needs to be cleared. And if the market starts to retrace, what we're looking for is, so we have this whole sequence, this one. We pull Fibonacci from the bottom of that sequence to the top of that sequence. The first thing we'll be looking for is Fibonacci to the market to retrace back down to the 38.2 Fibonacci retracement. That's the first level I would look at for the market to retrace to, and that is around the 21,000 area. So $21,000 for Bitcoin is what I'm looking for in a possible retracement that I think we're about to hit now. Are we in any sell position right now, or in any sell? Yeah, are we in any entry position for a sell here? Yeah, we actually are. Funny enough. What do I see? So in the 4-hourly time frame, what's happening is we got the market broke through the 20-day EMA and coming back up to retest it from underneath. So we want to see how the market will react to the 20-day EMA. And what I think actually will happen is the market will give up and get down to the 38.2 retracement, maybe all the way down to the sweet spot zone here, which is kind of logical because this is where we got a lot of liquidity. See this area from here down to basically here, a lot of liquidity here. And that liquidity needs to be cleared. Now, let's book Fibonacci from this bottom to this top to see what's going on. Doing that, we see that the market is stuck between the 23.6 and the 38.2 retracement. And the 23.6 that the market broke through previously is now acting as resistance confluently with the 20-day EMA. This yellow line is the 20-day EMA. This is the indicator if you want to use it. EMA 20, 50, 100, 200. If you want to know how to find the indicators, you go into this tab here, indicators, and then you just search. So this is the one that I'm using now. So confluently, we see that we got some resistance that needs to be broken if the market is going to continue up. In the same time, we had this long sequence that has a lot of liquidity stock and that needs to be cleared. So a lot of things are talking for the markets to come down, to take a breather. If it comes down, I said 38.2 is the target, and that conflues perfectly with the 200-day EMA that probably will be in this zone, which is the 38.2 retracement if the market comes down. And also in the same time here, I know it gets complicated now, I'm sorry for that, but I have to keep it like that right now. Confluently with that, from this swing, from this bottom to this top, this whole swing, this Fibonacci of this swing shows us that we have a strong demand zone here. So all these things are confluent. We have the 38.2 retracement on the biggest swing. We have the demand zone here, and we have the 200-day EMA that's coming into this zone. So I see the market bouncing off the 20-day EMA here with this double resistance that we got, coming down to this area, and from that we'll see what happens. With that said, I'm putting a sell limit right here. So market likes whole round numbers, and we got 23,000 price targets of Bitcoin right there. Yeah, I will go just beneath it. Just beneath it. So I'll say entry at, no, sorry, a little bit up. Entry at, write it down. No. Entry at 22.99. Let's be clear. Entry is for the sell is at 22,990 US dollars. That's what I see for this Bitcoin sell. And the target is 21,120, just to be funny. 21,920. That's the targets. That's the target I see. Stop loss. Right here. Stop loss at 23,350. That's where we put in the stop loss. I mean, I'll send this one out. And the Free Minds Trading Group. Soon, very soon. Oh, sorry, that was wrong. I might as well send it out in the Telegram channel as well. I think that's it for today. We have a sell going on for Bitcoin right now. Entry has actually already passed. It's still not too late to enter this sell. Might come up and play around a little bit here again, but I think we might see some downward action from here. With that said, my people, thanks for watching, and trade safe, stay blessed, and stay prosperous. I'll see you guys soon again.